So let's talk about how to use moving averages. There's a lot of different ways that we can use this to inform our trading and our analysis of cryptocurrencies and other financial assets. So moving averages can be helpful when identifying price trends of an asset. The idea is we want to have a clear idea of the general price direction over a period of time, whether that's up or going down. It can also be helpful when determining support and resistance levels. Now, the idea here is we don't know exactly where price is going to go to. If price is dropping, we don't know where the bottom is. We don't know where the top is. But what we can do is using support and resistance level, concepts of market structure, and moving averages, especially that 200 period moving average, which we saw in the previous video. We want to have an idea of where could price realistically go to. Where could we realistically fall to or go to? So if moving average is above price is below this moving average, it could act as a level of resistance. Now, on the flip side, if the moving average is below price, it could act as support, right? So let's say Bitcoin was 69,000 and the moving average is somewhere around 30K, give or take, on the daily, or maybe on the weekly, it's only about 20,000 or 25,000. Realistically, if Bitcoin were to keep falling and there's no sign of a bottom, let's say Bitcoin were to lose that 30,000 level and it were to fall, realistically, the weekly moving average could act as a level of support. Finally, we can also look towards moving average crossovers. These are useful. We'll take a look at a couple different examples of these. These can be helpful in determining trade entries, exits, and overall trend reversals or the shaping of a certain trend, whether that's an uptrend or a downtrend. This is where smaller moving averages cross over larger moving averages, where that implies an uptrend. Recent prices, right? The recent prices are represented by the smaller moving average. Those are going up compared to the long-term averages. And if the smaller moving average crosses below a larger moving average, that implies a downtrend, where recent prices are going down compared to long-term averages. So here's an example. This is Bitcoin to the US dollar. This is the daily chart, and this is the moving average 100. This is particularly focusing from February 2021 up into November. And here we see the Bitcoin US daily chart, where the 100 MA acted as support throughout most of 2020 and some of 2021, suggesting an uptrending market. So let's take a look. So here, particularly, so this is February 2020, I should say. I apologize about that. Here's our daily, our 100-day moving average. We see price fall to the line, particularly in January. Comes back up. It comes back down. Stops at the 100-day moving average. This is a particular noticeable moment. There's a specific level of support here, and ultimately it does fall with the onset of the coronavirus, COVID-19 economic impact, the impact of that, right? There's a flash crash. Financial markets really took a downturn into March, and this acted as a bottom, if you will. Here we see price coming back up. It's acting as resistance. It comes back up. It's rejected. Finally, price breaks back above. And this would ensue and last for the next year, maybe almost a year and a half, give or take. Price comes up. It comes back down to retest it. It holds. Here we see moving at the 100-day moving averages moving upwards. And we see price bounce back up. Here, once again, in September, several moments where price is falling to this line, and it is holding. This is suggesting that we're overall in this uptrend, and overall this 100 moving average is acting as a strong level of support. We really only see here is when we start to see a breakdown of this, right? Price is coming up, it produces a high, it produces yet another high and a higher low, right? The overall basic market structure tells us, yeah, we're in this uptrend. Here we produce a new high, we come back down to this area, we fail to produce a higher low, right? So this is where we start to caution, with a caution moment. And we also see, not only we see that the 100 moving average does act as a significant level of support, we do see a bit of a breakdown and a strong bleed through this level, but ultimately we see a strong candle back upwards and we produce another high, but it's not a higher high. So this was another indication that this market was breaking down. We bleeding through here. We do have a candle close, particularly below the level. How significant is this? I mean, I'm more concerned here that we didn't form this higher high, and the fact that we didn't form the higher high and that the low was lower than the previous low, right? So this overall told us, hey, this is a trend reversal, and this is confirmed when price broke past this 100 moving average once again, right? We see several instances here where the Bitcoin was using this as a level of support, holding through, trying to produce a new high, ultimately failing and falling below the level. Here we see the level acting as a level of resistance. Price kind of broke through a bit, ultimately was rejected, did not fall very far, and produced overall a higher low. I mean, considering this was about 10 days or so of green candles in a row, so this was a noticeable slowdown in the overall uptrend reversal to the upside. Price comes back down, finally breaks past it, and here we do see in late September a lot of consolidation, particularly at the 100 moving average, right? This acted as a significant level of support. So this does show not only as a level of support, but the direction of the trend. And we'll also take a look at a couple examples of moving average crossovers in the next few slides. So here are, this is when we can start to combine moving averages. Here we see a combination of the 9 moving average, the 9 period. This is in this blue line, and then we have the 200 period moving average in the yellow line. So here we see the 9 period really hugging and staying very close to the overall general price action. The 9 period moving average follows the wave-like structure of the price action, right? It's really copying the pattern of the overall Bitcoin chart. This is Bitcoin to US dollar. This is the 12-hour chart. So each one of these candles represents 12 hours of price action. Now, the 200 moving average in this instance reminds us that price and smaller moving averages are working against a bigger established trend, right? We're starting to see the overall trend, right, was still down, because this is resulting from the price action in May, June, July, where it was, for the most part, pretty much down. Prices were going down during this time period. So the moving average is factoring in all that price action, and it's moving downwards. We see a crossover here. Price comes back up. We do have somewhat of a meaningful candle close, but is quickly drops back down, and then finally a reversal back to the upside. We formed this higher low, and we are coming back up. So this here we're starting to see ways to use 2 different moving averages. So now we can start to say, all right, well, the 9 period crossed over, price came down, it formed a higher low, right? We're starting to use not only indicators, and we don't want to rely just on the indicator. We want to use concepts such as market structure, support and resistance. We're forming this higher low compared to the low before it, and we're near this moving average. We broke past it, Let's see what happens. Now we're breaking past again. We're starting to see another crossover. The 9 period fell below, and now it's ramping back up. It's crossing back over this 200 moving average. So this could have been a potential successful entry for a trade. And in this particular situation, it worked out. And as we see, once again, particularly here, late September, the moving average, particularly the 200 moving average, acts as a level of support when price comes back down to it. Here's another example. This is the moving average 20 period moving average. This is Cardano to the US dollar on the 12-hour chart. Here we see the moving average acting as support for price in the upward trend, right? Price, this is in late July 2021. Price is really consolidating and staying above this moving average. It's using it as a level of support. It comes back up. We're starting to see a bit of space indicating that the trend is strong. Price is increasing at a faster rate than the moving averages. That's why we're starting to see this space. It comes back down to the 20 period moving average. It acts as support. It bounces back up. Here we see it come back down. It's acting as support. It comes back up, acting as support. Comes back up, acting as support. But we're starting to see a further breakdown of these levels. Price finally breaks back down, right? We failed to produce this higher high, right? We did form the higher low, but ultimately we failed to produce a higher high on this candle. So overall, this move failed and showed a weakness of buying pressure by the bulls, and we came back down, fell below the 20 period moving average, and when we came back up to it, now is acting as resistance. So we were rejected here, we were rejected here as again. Arguably we broke past here, but not in a meaningful way. We did attempt to produce a higher high. We did produce a higher low here as well, but the problem is ultimately we failed to produce a higher high into October and November, so price did not truly recover. There was an attempt, as we can see, and it was set up so that, yeah, there was the shift in the market structure. We wanted to see this higher high. That way we could have continued and maybe retraced back to these higher prices. That didn't happen in this particular situation. And here we're starting to see moving average really used as just another level of confirmation, right? It's not just about the moving average. It's about using it in relation to support and resistance, trend lines, market structure, understanding how the market works, and then using these indicators to add to your analysis. Now here's an example. This is the 20 period SMA, particularly this. What's interesting here is that this is another sign of this acting as resistance, right? Buying on this candle might seem like the right idea. We see this large green candle. Maybe this is the breakout. We're going to break out past this 20 SMA, 20 moving average. It looks like we're putting in a bottom, right? Some sort of bottoming pattern. We have a low. We're forming a high, we're forming a higher low, and maybe this is the breakout to produce and to reach back up to this $8.49. This is on a stock chart, but it's still relevant to the concept of trading and using moving averages. The reality is the asset is just going to hug the 20 period moving average. It rises up to it, arguably kind of breaks past it a little bit, fails to produce a meaningful close above it, and it hugs the 20 period moving line, goes lower. What's interesting here is that, we want to look for closes, right? Particularly candle closes more than wicks above these levels or above these moving averages. But just because price went above it, as we saw here, and closed above it, doesn't necessarily mean it's broken. We really want to see a strong reasoning, a strong argument. We want to make a strong argument for a trend reversal or for a level to be broken, especially if it's a let's say we're in this downtrend, right? We were coming up, we come back down. Price failed to produce a higher high, and we're seeing lower lows, lower highs. We're in a downtrend from this point, right? There's a breakdown of market structure, especially after this strong pullback. Now, the failure to produce a higher high, especially here and here, gives us reason to believe that, yeah, we're in this downtrend. There needs to be a really strong reasoning, a really strong argument for the case that, hey, this level is going to break, and obviously it did not. So I would just be aware that just because a candle closed above a level or closed above a moving average does not necessarily mean that it's broken.